Good afternoon, and welcome to our first webinar for the year. Focus Forward, presented by North Star Strategic Partners. Before we dive in, I want to introduce North Star. We are a team of business strategies focused on helping your business increase profits. We ask the questions that you may not think to ask and examine the issues that may not always be at a surface level. North Star has helped numerous customers achieve, grow, and maintain prosperous businesses over the years. So, what are the four essential keys to business success in 2025? That is our proven methodology, the 4 points of focus, and our speaker for today will be talking about it in a second. Alrighty, so our speaker for today is none other than Wendy Roberts. Wendy prides herself on creating winning strategies while helping her customers maximize their resources and their profits. As a CPA, she knows her way around corporate financials. As a former corporate finance executive and startup CFO, Wendy offers a broad insight into finding solutions to help her customers achieve exceptional growth and financial success. She has a bachelor's degree in accounting from Indiana University, MBA courses at the University of Tampa, and years of experience counseling customers on financials and profitable success. Wendy is also a published author. She is originally from the Midwest and was raised in a working class family. One of her most favorite and cherished hobbies is cycling. She never fails to miss a weekend cycling in the Bay Area. So, just a couple of house rules. For any questions, you can type it in our chat box, and all questions will be answered towards the end of the webinar. And the recording will be sent to your emails. So, let us hear it from Wendy.
Thank you, Shai, for that very wonderful introduction. So, welcome to 2025. And we're going to be talking about some challenges that may be from a business standpoint and what you can do to address those, and how the 4 points of focus can help you grow your business into a very profitable entity. So, the first thing we're going to talk about is the overview of those 4 points of focus. And those are marketing strategies, financial structure and growth, operational excellence and what that means, and people and team building. We'll talk about some practical strategies and some tools, and then at the end, we will go into Q&A. Now, let's talk about why 2025 is different. We certainly have seen some economic climate changes within the last year or so, the last few months actually, in which there are now uncertainty around tariffs as well as with inflation. The consumer price index has been the lowest it has been in the last year or so. So we are seeing some maybe headwinds, but there's also opportunities with technology advances, such as artificial intelligence, AI. There's a lot of tools out there that you can use in your business to help you become more efficient. And there might also have been some market challenges, which, we're seeing that right now with some uneasiness in the Dow. But I do believe that we have great opportunities in 2025. And we have seen some supply chain resilience in that it was really bad during COVID, and it has gradually gotten better throughout the last 2 to 3 years. So when we look at things like the industries of construction and different industries that rely on supply chain, it has gotten a lot better. And there is some sustainability pressures, but we are addressing those with more ability to manage our cash. So we'll talk a little bit about that as well. So let's dive into a little bit more about the 4 points of focus. Now, this is our methodology, as Shai mentioned, and we call it the 4 points of focus because regardless of your economy challenges, these 4 points will help you build a robust company. It's a holistic approach. And if you look in the upper left-hand corner, there's the red for the target. It's the bullseye. That's the target market of your customer, who you need to talk to and who buys from you. The second is the green, which is money, profit. We talk about financial structure and growth, very important. Next is the orange, which means to optimize. That's the operational excellence, optimizing your business so it runs at the greatest efficiency. And then the blue is trust, trusting in your team, trusting in the people that work for you. So very important. So when we pull all of this together, it creates a robust opportunity to build a company of value. So when you think about pulling this all together as a holistic approach, we create that company of value that creates more profitability. And the more profitability you have, the more sustainability you're going to have. And from that sustainability, you will be able to invest in your business so you can create more scalability. And the end result of this is when you create a company of value, that means that you will have an asset that is worth something, that you will be able to sell at a multitude of what we call 2x, 3x, 4x, whatever the case may be. Very important to build a company of value. You spend a lot of time in your business. It's important to focus on the profitability, your sustainability over a period of time, and then how to scale your business with scalability. So let's first talk about the first point of focus, which is marketing. Now, it's very important for you to be able to analyze your marketing and create a mission statement. That's the number one task. What is your direction? Who are you trying to attract? The next is creating that key marketing message. And it needs to talk to that consumer that you are wanting to attract to buy from you. You first have to have that consumer be able to talk to that consumer before you can turn that into a sale, which then creates revenue for your business. Next, you need to think about defining goals. What are the goals for you and your team? What is it that you want to achieve? Next is setting a forecast around expected revenue. What do I want to achieve over the next several months through the end of 2025? What does that landscape look like? What can I expect in revenue? And last, when you're thinking about marketing and where you stand in your environment with other companies, it would be helpful if you had benchmarks. So investigating benchmarks, getting information about what other companies are doing, is a way to gauge yourself and how you might be able to improve. So let's talking about that first task that I just mentioned, crafting a marketing mission statement. Now, the definition needs to be clear and concise. It needs to talk about your marketing goals and how they align with your business vision. So when you think about it, it really is your purpose. What's your why? What are you trying to communicate? Very important to have this down because it also is something you're going to be communicating to your staff, to your employees, and also to third parties who are going to be helping you, let's say with referrals and networking, very important. Plus, it's also going to be communicating to your customers so that they can provide you with referrals. If you do a really good job, they're going to provide you with referrals. And the nice thing about referrals from customers or from your referral sources, your partners, is that it costs you nothing other than time to talk to them. Costs you nothing. You don't have to spend money on Google Ads. It's the best form of method to build your business is networking and providing value to your customers. The next key element is your target audience. We already talked a little bit about your target customer, your target audience. Who are you trying to talk to? And what is it that you're offering to them that they will want to buy from you? When we talk about someone wanting to engage with you, I'm sure all of you have heard this before, but it's called know, like, trust. They first have to know about you, then they have to like you or like what you're offering. Then they have to trust you. Once they trust you, then they will consider buying from you. So when you establish that trust, you're creating a value proposition. That's the next key element. What is it that you are trying to sell to them, and what's unique about you than everybody else that can garner that trust? And last is, what is your action plan? Coming up with that action plan. You want to be able to create one for you and your staff, execute on that, and then be able to measure your accomplishments against what you had decided was the right path that you created. So it's very important to be able to measure yourself so that you can make changes that can help you hone in on your customers. Very, very important. Marketing tools and tips. All right. So one of the things that I highly encourage, remember we were talking about creating that marketing plan, that clear, concise, how to execute it, etc., and how to measure. Data-driven decision-making is a super helpful tool for you. When we look at the customer acquisition cost, that's the CAC. That tells you how much it costs to acquire a new customer. The lower that number, perhaps the better, but you got to look at it in the industry that you're in. The second key indicator is, or a KPI, key performance indicator, is your customer lifetime value. How long do they stay with you? That's known as a CLTV. So if you're looking at it from, let's say, down the road where you want to sell your company, these two key factors are important to a buyer. What is your customer acquisition cost? And most importantly, what is your customer lifetime value? Lifetime value means how long have they stayed with you as a customer? The longer, the better, meaning that it's much easier to sell to a current customer than it is to acquire a new customer. I'm sure you've all heard that. So if you can leverage what you currently have right now, get more referrals from your current customer base, it's a beautiful way to be able to grow your company exponentially. And the last one is return on the investment. What is your return? How are you measuring that? Is it a good return for all of the work and the money that you're putting into your marketing? One thing you might also want to do is think about doing a marketing budget. Very, very important to do that. It's easy to be able to measure your ROI with a marketing budget. Next is lead generation tools. Now there are different ones. I call these, CRMs, customer or client relationship manager tools. These are very important for you to keep track of what's actually coming in the door and what the response is, and your ability to convert a lead into an actual sale, which generates revenue. Now, there's several of them out there. You can take a look, but a couple of them I will mention are Pipedrive, HubSpot, OptiMonster. We actually use OptiMonster in our company. And then last is the customer experience. What values are you bringing? Remember that value proposition? What is it that you are delivering to that customer that sets you apart? One thing I always recommend is doing a customer experience or customer survey. Because you want to know what your customers are doing. What do they think about you? Doing that at least annually, but more importantly, I am a proponent of doing it at least semi-annually, if not quarterly. Again, it kind of depends on your industry and the bandwidth that you have within your company, but at least do a customer survey once a year to get a gauge. You might be able to find new areas to explore as new products or services based on what customers are telling you. Very important. Don't ignore that. It creates wonderful value and also lets customers know that you care about them and you want to be able to help them increase their company and their value as well. It's not a, think about it, it's a give-give situation. It's not all take. So it's a give-give between you and the customer. Now let's talk about a SWOT analysis. I highly recommend that you do this process. It's very important. Maybe even do this before you create your marketing budget. But a SWOT analysis will help you identify what your strengths are in your company, what weaknesses you have that you need to address, what opportunities are available, and what threats are out there. So the strengths and the weaknesses are internal. Those are from you internally. You're doing an analysis of your company. How can I improve? The external is your opportunities and threats. That's the economy. That's other things out there that you have a hard time controlling or can't control at all. So let's use the example of a construction company. Now, this construction company, let's say they do highly specialized, smart technology within very high-end homes. So that's what they do. They install very highly intellectual systems within a company. Within a home. So we're talking about smart things, right? Being able to have let's say a panel that you can put music in one area of the house and not another, or maybe all over. Taking blinds up and down, putting lights on in different locations. So this would be all controlled by a panel, let's say. So what are the strengths? The strengths are, how well are we doing? What are we doing that sets us apart? Why are we unique? Because that's a highly skilled service to be able to install that type of technology in a home. What are some of the weaknesses? Now, again, we're talking about internal here. Some of the weaknesses might be having a hard time finding someone who has that skill set that can install it at these customers' homes. Now, external would be opportunities. With the expansion, let's say, of home building here, let's say in the Bay Area or around the country, there would be a need for this type of smart technologies. There's opportunities. What are the goals? How are demands shifting? Again, talking about what we foresee here and going in 2025. And then the threats would be, what is it that's going to keep you from perhaps becoming a much larger company? What are some of the threats externally? Those might be, well, the technology might be limited, or supply chain might be having a hindrance in order for me to get the equipment in on time. So through this SWOT analysis, you're looking at what are your strengths, your weaknesses, your opportunities, and threats. When you do this analysis, then you can start thinking also about, how do I do my marketing? How do I shift my marketing? How do I create more opportunities with my marketing based on that SWOT analysis? I highly recommend that you do that. The tool is here. I believe we're going to be giving the presentation out. So if you like, you can take a snapshot of this. Important for you to think about how you can do this both internal and external and address the challenges and opportunities that you will have as a business. Now, let's talk about the second point of focus: financial structure and growth. I think we all know that cash is king. It's very important that you manage your cash flow and do it appropriately. Because there are things that you have to maybe think about down the road. Maybe it's taxes, you have to pay your taxes, or maybe it's I've got a inventory I've got to take care of. Whatever the case may be, proper cash flow management with budgeting and forecasting is so important. Now, I do distinguish the difference between budgeting and forecasting. Budgeting means how I develop my budget based on my past performance. And forecasting is, what do I see happening down the road? Let's say the next 12 months. I am a proponent of doing a 12-month rolling forecast. And the reason is because there might be some changes that are happening that you then can say, okay, based on this event, I've got to hire 2 new people in the month of July. How does that might affect my cash, and how much do I need to cover that from July all the way through the end of the year of 2025 through December? Very important to understand your cash flow and how you can manage it so that you know what your streaming is, how much cash is coming in, your pipeline from sales versus what's going out. When you have a strong financial process in place and strong financial strategies, it's going to prepare you for more to weather the things that we don't know about, like to weather the storms. But at the same time, it's going to be able to give you an opportunity to create new products or services and to be able to grow your business. Very, very important. And another thing that I wanted to talk about is focusing on net profits so that you can reinvest those into the business. We build profitability plans for each one of these points of focus so that you are able to use those profitability plans to create more revenue and more net profit for your business. Now let's talk about financial mistakes to avoid. So it's very, very important to keep your financial statements up to date. That's your balance sheet, your income statement, and very importantly, if you're not using it, your cash flow statement. Very important to recognize all 3 of these. Having information that's out of date, you cannot possibly manage the future. Highly important to have updated financial information. And if you don't have a bookkeeper or an accountant, hire one. If you have a bookkeeper or an accountant and they're not up to date on your financials, fire them and hire somebody who will do it for you. Another thing we just talked about is ignoring cash flow trends. Very important, because what you don't want to do, and so many small business owners do this, they don't plan for the future. Remember, I was talking about having a forecast. Very important, because if you don't understand how your cash is flowing through the business, you're not going to be able to seize on those opportunities that are going to come your way to help you improve and grow your business. And then finally is the lack of contingency planning. I have several stories that I've heard from other accountants and other CPAs, as well as our own internally, of stories where business owners did not plan for the unexpected, such as transitions, including divorce or death. And so it leaves the company very wide open to failure. And that's the thing we don't want you to do. So having a contingency plan, an exit strategy, what we call here at North Star, the end game. We help you plan for that end game. And succession planning, we help with succession planning as well. Let's say you're a family-owned business and you want to be able to pass that down to your children. How are you going to do that? What's the right structure? What's the plan? How are you going to manage it? Do you want money out of it? All of these things come into play when we talk about succession planning, contingency planning, and a profitable exit plan. Okay, so here's some financial tips for success. Create a custom business forecast. I think I talked about this already, but super, super important to have that forecast that's a rolling 12-month forecast so that you can plan for the unexpected. Because as small business owners, we know it's going to happen. We have to plan for it. Second is set 90-day goals. I call these sprints, 90-day sprints. So what do you want to accomplish in quarter one, which we're still in? What do you want to accomplish in quarter two, quarter three, quarter four of 2025? And hold yourself accountable. And the ones you don't close out for Q1, quarter one, move them over to quarter two. Don't let them just drop off the list, because that is not a good habit to get into. You want to be able to set your 90-day sprints and close them out and move on to the next sprint. And then invest in financial literacy for your team. It's important for them to get education and be able to understand certain things that are going on in your company so that you might be able to get some great ideas from the people who are working for you if they understand a little bit more about the business and how you're running the business. Financial literacy goes a long way in helping that. Okay, now I know this is a little bit hard to read. My apologies for this, but I wanted to cover 3 different KPIs in the financial structure and growth process. Now, as you remember, in marketing strategies, we talked about the CAC, the customer acquisition cost, the customer lifetime value, known as CLTV, and our return on our investment, ROI. Those are 4 key elements for your marketing strategies and creating your profitability plan for that. The next is your profit and loss and balance sheet elements, your financial structure and growth, your financial KPIs. The first one is called the gross profit margin. Now, getting back to our construction company example, it is very important for you as a business owner, if you're running projects like construction jobs, landscaping jobs, architecture, anything that's project related. And it could be interior design, it could be staging for a company, for homes, anything that is project related. Very, very important to understand what your gross profit margin is per project or per job and your overall gross profit margin. So, how do we calculate a gross profit margin? We take the gross profit, which is down here. If you look at it, says gross profit, it says $75,500 divided by your total revenue. And in this case, it's $85,000. Now, it's a very simple formula. Gross profit margin divided by total revenue gives you 0.88. Now, this isn't a hypothetical, so 0.88 is going to be a little higher than what most companies are. But let's say, for example, you are this construction company, and a good gross profit margin for a construction company that uses subcontractors is 0.4 or 40% to 50%. That's very healthy for a construction company, very healthy. So that tells me that you are properly managing your subcontractors and your supply chain, being your materials, so that you are garnering at least 40 cents to 50 cents of every dollar you bring in. Super important to understand that. The next one is your net profit margin. Now, the net profit margin measures how well you manage the business after you have taken in the revenue and paid all of your expenses, all of them, including paying yourself, paying your rent, your utilities, everything. So the net profit margin is the net income divided by total revenue. So in this case, it's $42,620 divided by $85,000. And in this case, again, this is hypothetical, it's 0.50 or 50%. Now, is that high? Yes. But this is a hypothetical. And we made him a little bit skewed, so it doesn't represent any company that we service or have talked about. So 50% is a little high. For a construction company, we're in the double digits. Let's say 20 to 30% or 20 to 25%, depending on how the owners pay themselves. But those are healthy profit margins. That's what you want, healthy profit margins. Now, let's switch to the balance sheet. Now, I should say that the income statement tells you your profit, tells you how much money you take in, where you're spending it, and what's left over that goes in your pocket. That's a profit and loss, or what we call an income statement. It's the same thing. Now, a balance sheet says how much your assets are, what do you own, to what you owe, and what's left over is your net worth. That's called book value, net worth. So the balance sheet says, how strong are you during a period of time, at a point in time? So it measures a point in time, let's say over 2025 or over 2024. And a key KPI is working capital ratio. And why is this important? It's important because if you're trying to get a bank loan, the bank is going to be looking at this ratio because they want to know whether or not you're able to repay the debt that they gave you, the money they gave you, plus the interest they're charging you to use that money. And a second is, if you've never heard of this, do this on your balance sheet. Print them out of your QuickBooks, FreshBooks, whatever you have, and do this easy calculation as well. And to a buyer, it tells them how cash fluid you are. It's called the working capital ratio. So let's talk about how we do that. Very simple math again. It's the total current assets. So notice the word total current assets divided by the total current liabilities. So in essence, what we're measuring here is liquidity. So let me give you an example. If you had $1,000 worth of cash and $1,000 on your credit card, which is considered current liabilities, it's 1-to-1, meaning you're exactly break even. So if you had to close your business, you would have exactly the $1,000 to pay off your credit card. Anything less than that 1-to-1, you're not in a good position. Anything greater than 1-to-1, you're better. Most banks like to see 1.25 or higher. In this example, it's 1.65-to-1, which is a healthy cash flow. Could it be better? Absolutely. How do you get it better? Implementing the 4 points of focus. Now, to give you the example, if I take the total current assets, we take $23,200 and we divide it by the total current liabilities of $14,000. That's how I came up with the 1.65-to-1. Very, very important to have these 3 KPIs. Now, let's talk about the third point of focus, operational efficiency, or what we call operational excellence. Now, this is very important. Again, if you ever want to sell your business, the more you have documentation in the business, the more you can demonstrate that your company can run without you, the more likely a buyer is going to pay you a higher premium for that. And even if you don't want to sell, or you're not, oh, I got 20 years, operational efficiency is very important because the more you are at efficiency in how you operate your business, the more it's going to drop to the bottom line. In other words, the more money you're going to put in your pocket. So it's very important for you to focus on operational efficiency. Many small business owners ignore this, and in my opinion, it's a mistake. So you want to streamline. There are 4 key elements in order for you to focus. The first one is your strategy development. Now, this is a plan, again, a profitability plan I'm presenting to you. This is how you do it. The first one, strategy development. Make a list of your processes that you want to document and set out a timeline to do it. So in other words, milestones. Who's going to do it? What are they? And here's the thing, you can take time. It's not something you have to do like right away. In fact, I highly encourage you that you come up with a plan over the next 12 months. Use 2025 as your plan to develop your strategy of how you're going to document what we call your standard operating procedures. Next is to execute that plan. Document the processes. Make people hold accountable, right? To make sure that they get this documented. So documenting the processes is the process excellence. The next is your performance management. That's the third key element of your profitability plan here for operational excellence. You need to have key performance indicators. Again, what is your ROI, your return on your investment? Now, this is more than likely going to be internal, but you could be hiring somebody outside to come in and help you document. Perfectly fine doing that. We now can measure what is our efficiency. Are we on track to our strategic plan that we've developed? And how are we holding our management team and how are we holding our employees accountable through KPIs or key performance indicators? And last, I think is most important, and this is something that as you go through that process, let's say over the next 10 months or so, or 12 months, whatever your strategy plan is, leadership and culture is so very important. And that leadership comes from you. It comes from you as a business owner. It comes from you as a CEO. People follow CEOs. They follow leaders. So being a leader, championing what you're trying to do, reminding your employees and the people that work for you why you're doing it, and set up a culture that's positive as to why we want to do this and what the ultimate outcome is going to be. What is that ultimate outcome? Obviously, it's going to make their jobs and their lives easier executing, and it's going to create more profit for you. And if you do profit sharing for your employees, that's the ultimate end game in our operational excellence. Now, if you have any three of these, let's talk about this. If you have any three of these, you have a problem in your business and you are not running efficiently and you're wasting money and time. You're overpaying people. Would you like to know, am I paying somebody to be efficient or am I paying somebody to be inefficient? So in other words, would you like to know whether or not your employees are costing you money or making you money? If you want to know that, we have a tool that we've developed that will tell you, are you making money or are you losing money on your employees? Most business owners want to know that. But here's some indications. If you are seeing these in your business, you need improvement in your operations. Number one, missing deadlines. You're not able to hit your milestones on your promises that you have promised to customers or that you've promised to partners. What is that going to cost you? Number one, it could cost you future sales. Number two, it's already costing you some inefficiencies, so you might have project overruns. That's not good either because, again, that's costing you money. But more importantly, if you also have frequent errors within your product, you might be losing trust with your current customers. You may lose business, and that's never a good thing if you have frequent errors. Another indication. And finally, one that should be very apparent in your business, do you have an over-reliance of manual processes? If the answer to that question is yes, there are tools out there that can help you be more efficient. You need more systems in place to get rid of these manual processes because, again, it's probably costing you money to pay employees than making you money. So let's talk about what we call the triangle of success in operations. So this is where, going back to the point I made about systems and inefficiencies in the last point I just made, when you focus on this technology piece, or when you focus on this triangle of success, where you focus on your people, making them more efficient with the processes that you are documenting, and using technology to be able to be more efficient, especially if we've talked about artificial intelligence today. It's coming. It's here. There's going to be massive changes in the next 3 to 5 years in how we do business. You need to get on the bandwagon. If you're not, you're going to be left behind. And so technology is so very important to help the people, and it improves your process. This is the ultimate success story for your business. I highly recommend that you incorporate this in your plan. So let's talk about tips for success. So documentation of your workflows, very, very, very important. I've already stressed this. It's so very important for you to understand what your people are doing, how they're doing it, and if you ever sell your company, it's a wonderful opportunity to gain more value for your business because you've documented your standard operating procedures, or what we call SOPs. Create custom flowcharts. Those are easy. You can do these in Excel, in Google Sheets, or you can get the Microsoft tool, Visio, or there are other tools out there. So important to understand and create flowcharts, custom flowcharts. Now, the reason for that is, and we do this a lot with our customers, number one, it's a training opportunity. When someone comes new into your business, they can see these flowcharts and understand what goes on with their job and how they interrelate with other people and what the flow of information is within your business. So very important to understand this as a training tool. Again, with flowcharts, you can have those as part of your package when you sell your company. Super efficient, super effective. It tells a lot. And here's another thing too. 80% of the population is visual. And when you have a visual tool and someone hears it, it reinforces it. So you then can increase your efficiency with your employees. And last, I had talked about this already with that triangle I presented earlier. Investing in technology is your friend. Don't be afraid of it. Don't be afraid of technology. It's here, especially AI. Embrace it because it will help you improve your business operations and also improve your bottom line, and it will increase the value of your business. Now let's talk about the last point of focus. Number 4, the blue, the trust. People and teams. We all know that to raise a child, we have to have a village. It's really hard raising a child by yourself. Your business is a child. It takes people to bring up your company and expand it for future revenue, for future growth, whatever the case may be. You need people. Yes, artificial intelligence and technology definitely help with that, but we still need people to help us grow our business. So leadership is super important. For so many of us, if you have never been in a leadership position, let's say in corporate, many business owners are good at what they do, but they have not been taught how to be a leader. And that's okay. There are ways that you can do this in order to be a good leader. And as I mentioned earlier, when you're a good leader, people will follow. So, number 1, communicate clearly and communicate your expectations. What are you looking for? Communicate the mission of your company to your staff. Communicate the marketing mission that we talked about earlier. Let them know where you're going. Communicate, communicate, communicate. I cannot stress that more. Number two, empower others. So when you see somebody doing something great, tell the whole world. Reward them in some fashion. Tell them in front of other people how great they did. And don't wait to an annual review meeting to do it. Do it on the spot. If you find somebody not meeting your expectations or not understanding clearly the communication, take them into your office and talk to them about it. And of course, be respectful. Maybe use, I have noticed, how can I help you, etc. You don't want to put them on the defensive. So that's empowering others, helping them move forward in their job, professionally and personally. So very important, and do it with respect. And last, lead by example. Lead by example. It's so important because, again, people follow leaders. We've seen this through history. We've seen this, I'm sure you've worked at other companies perhaps. And think about one person, maybe it was a teacher, maybe it was somebody else that you admire as a business owner. Watch them how they lead. It's so very important. There's a negative and a positive. Positive leadership wins at the end of the day. There's a great book I'm going to recommend called The 1 Minute Manager. It's about 100 pages. It's an excellent book on management. Now, there are 10 important qualities of a highly functioning team. I'm going to go over 4 of them. I mentioned all 10 in my book that we're going to talk about in just a minute, but I'll mention these 4, okay? The first one is to have a clear and aligned purpose. We've talked about this already. The mission statement, our value proposition. Where are we going with the company? Clear and align. Align your people to the purpose. Your why. Why are you in business? Help them understand where you are coming from as a leader and what their expectations are. Second, clear roles and responsibilities. Clear roles and responsibilities. So very important, so there's not overlap. Again, getting back to the operational excellence, point number 3. The better you have defined processes and standard operating procedures, and the better people understand what is required of them, and perhaps using flowcharts as training materials, helps them better understand what their roles and responsibilities are. The better they understand, the more efficient they're going to be. Third, trust and mutual respect. I mentioned that already just a few minutes ago. Trust and mutual respect. So very important in understanding how to manage people and what a high quality team is. And the fourth one I'm going to mention here is having that culture. Remember, we talked about culture in point number 3, operational excellence. Open and clear communication. Letting your people know, provide suggestions of how we can improve our business. Open and clear communications. When you have this type of environment where you've got great culture, you have leadership defined, people understand what's required of them, you will accomplish so much in your business. It will be easy managing people. This really works. I've seen this through my career, and I practice this every day with my staff. Can I do better? Of course, we all can, but that's the point of leadership, continuing to grow and help your team grow, which will help in turn to grow your business. So a little fun thing that we've done within our company, as well as we do with other companies, it's called the DISC profile. Now I talk about the 2 different types, the Myers-Briggs and the DISC. Excuse me. The Myers-Briggs is a little bit more, it's more to it. Excuse me, but the DISC is very, very easy to use. So This is tells you personality types, and this can be really fun with your leadership team of seeing who has what personality type and how everyone interacts. Now, what's most important here is that you need every one of these people, these different ones, a D, an I, an S, and a C, in your company, because each one has a particular function within your company that helps you grow. The first one is the D. Somebody who's high D, they're very driven, they're ambitious, they're strong-willed. You probably know these people. Usually, business owners and CEOs are high Ds. So then we go into the influencers. So these are your high Is. These are your enthusiastic people, your extroverts, let's say. They're warm, they're persuasive. These are usually your salespeople. Then you've got your S's. And these are known as steadiness, right? So D is dominance, I is influence, S is steadiness. So you would have loyalty. They're more relaxed. They're highly modest in how they approach things. These are your nurses, your teachers. Very important around this. And then the last is your compliance people. They're very detailed oriented. They're cautious. They're very prepared. Those are usually your accountants, your lawyers, your engineers. So you can see how each person that I just mentioned and what their particular personality types, how they fit in your business. And again, you want these types of individuals. You don't want all Ds. You want people that are Cs. You want some people that are S's. Perhaps if you think about customer service, you probably got an S, and that's a good thing. If you got a sales staff, you probably want some I's in your sales staff. Again, for your accounting team, you might want C's. So important for you to understand how this all works together. And again, this can be something really fun to do with your management team. Okay, let's talk very quickly about your Polaris, your North Star, your end game, your exit strategy. So there's different types of exits. And remember, we were talking earlier about succession planning, how that all fits in to whether or not you want to sell your company in 1 to 2 years, or if you want to do it 20 years from now, that's okay. But start thinking about your end game. What is it that I need to do in order to think about what might be the next steps? And the better prepared you are, even if you want to exit 10 or 20 years from now, the more efficient you're going to run your business, and the more you're going to be able to adjust to things that you don't know are going to happen in the future. Very important. So you got an initial public offering. For many small businesses, that is probably not going to be an opportunity, but it could be. I mean, this is where you might be selling your company or part of your company to private equity or to venture capital, that then you would have an exit with an IPO. There might be a merger and acquisition. So we've seen mergers and acquisitions, and they kind of ebb and flow, but most companies are going to be bought either with a merger or with an outright acquisition by, let's say, a third party or a strategic partner. The third might be an employee buyout, a management buyout. And there's opportunities. I'm working on one right now that is a management buyout, employee buyout of a business owner. These are common as well. And then there's liquidation, which is never something that we want to do, but sometimes it does happen. Unfortunately, if there's a divorce or if there's a death of the business owner, you might have a liquidation of the company. So let's talk about valuation and valuation methods. So there are actually 3 different types of valuations, methods that you can use. One is the asset valuation, which if you have intellectual property or fixed assets, that might be part of that. The second is revenue, where we look at the revenue over a period of time, the last 3 years and the current. And then there's the market. So much like when you buy and sell a house, there's a market out there for buying and selling businesses, and there's a lot of data out there. We use a tool that uses SBA data highly reliable, and we can pull comparables. Just like you would with a house, we pull business comparables to see what other businesses were selling in your industry and what did they garner. So very important. We also, when we're evaluating a company and creating a value for that business, we look at what's known as SDE, or seller's discretionary earnings. There's a calculation that we go through that. And we also might look at EBITDA, depending on the size of the business. That's earnings before income tax, depreciation, and amortization. So all of that goes into determining what the value of your company is and what you have potential to sell for. So what are the next steps? So we've gone over the 4 points of focus, the marketing strategies, and how to build a profitability plan for that, financial structure and growth, how to build a profitability plan and KPIs for that, operational excellence, why that's important, and the strategy around building a profitability plan around that, the 4 steps that we went over. And then last, we talked about people and team building and building a profitability plan around that aspect. All of this pulled together creates that company of value, the profitability, the sustainability of profits, and the scalability of the business, which leads you to that end game that we just talked about. So if you're interested in more about the 4 points of focus and how your end game might play out, the Only Business Compass You Will Ever Need is available on Amazon. Here's the QR code. We published this book in January of last year. It's still very relevant today. It has a lot of information that can help you out as a business owner. If you want to hear more about the 4 points of focus, you want to talk to me, I give a free 30-minute consult. And then if you're thinking about, I really think I could use this methodology to grow my business and create it for an exit, then you certainly reach out to us. We'll give you that information, and you can start working with us right away of how we can implement those 4 plans that I talked about today. So our services, just to recap on that, our 4 points of focus, it's very strategic. It's customized for you based on your business, your industry, where you want to go. We customize it all to for our clients or customers. We can do an evaluation of your operating processes and what you need to do to beef them up. We can also look at a customized cash flow system. Again, back to that second point of focus. If you don't have a cash flow management system in place, highly recommend that you do it. Should be step number 1 in continuing your sustainable business and growing your business. We offer on-demand CFO services. I've been a CFO for quite some time, and I help small businesses grow their business. We can look at KPIs. We talked about a lot of key performance indicators throughout this time that we've been together. And then we can offer you a valuation for a business if you're interested in what your company is worth. So if you are wanting to connect with us, this is how to do it. This is the office number. And here's info@northstar-sp.com. And our website, if you are curious of what we do, want to get some more insight, there's a video there explaining in more detail about the 4 points of focus. So thank you for joining us today. I know we got 1 minute. I'm not sure we got time for questions, but go ahead.
Yep, we have quite an interesting question today, Wendy. First one is, you highlighted the importance of cash flow and forecasting. What are some common financial blind spots small businesses overlook, and how can they avoid them?
Blind spots. Okay, I think we touched on one, not having your financials up to date. If you don't have your financials up to date, it's impossible for you to build a cash forecast and know where you're going to be spending your money and how you're going to be spending it. So looking in the mirror and, having your financial statements several months back or even a year back, it's like are going into a cave without a flashlight. So you need to understand where you are, updating the financial statements clearly will help you keep that flashlight on and find where you need to get to your profitability level as well as that end game again. Hopefully, I answered that question.
Thank you. And just one more question. What's one key trait that separates highly effective leaders from average ones, and how can business owners develop it?
Leadership. Well, I kind of mentioned the 1 minute manager, but here's a formula I've used as a leader and as a manager is number one, always show mutual respect. Expect that from your employees and you give it right back. Mutual respect. Number two, letting them know that you have their back no matter what. You as a business owner, the buck stops with you. Letting your employees know that you have their back. If it's with a customer complaint, whatever the case may be, you have their back. And number three, invest in their future. Invest in their education. We talked about that. Invest in their education as well as in professionally as well as personally. Let them know that you are helping them grow as an individual, as a human being. That goes a long way. Those three things have worked for me throughout my 30 plus year career.
Thank you so much. And those are our questions for today.
Awesome. Perfect. Thank you so much. We truly, truly thank you for spending time with us today. My hope is that you were able to create some ideas for yourself to improve your business. And again, if you have any questions whatsoever, please reach out to us. I'll be more than happy to talk to you about your business. With that, thank you and have a wonderful, blessed day.